Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, March 26th, 2010. Another wild day on Wall Street, ultimately culminating with a flat market here, folks, in the mid-afternoon session on the markets. As we approach 2 p.m. Eastern Time, the Dow is flat on the day. NASDAQ is down 8 points, S&P 500 down about 1.5 points. But the crazy thing about today was initially we started with a small gap up. We rallied up as the dollar fell down, and then the markets just collapsed again. This is the same general move that we saw yesterday in the markets, again, with a major move to the upside and then a huge collapse in the afternoon session, which was known as a monstrous reversal signal. Now, again, doesn't mean that the markets have topped out. We don't know yet. Again, that's pieces of the puzzle we're piecing together. We will have a report out tonight in the Research Center, which is part of the In the Money Stocks Research Center, and you can go sign up for that again, and that'll be in the video tonight on the Research Center. But the bottom line is we'll unveil that today to tell if this market did make that topping portion on Friday. And again, Thursdays to Fridays move could be that signal. Now, we don't know yet. We're going to continue to piece together those puzzle pieces. Now, a couple things to go over here. First of all, the big reversal yesterday, that was huge, folks. The way the markets were ranging to the upside of 120 points on the Dow to reverse down like they did and close at the lows of the day, really off the double bottom from Wednesday. Note this double bottom here from Wednesday. Thursday's close, we pierced it and closed just above. Today, you rallied up again, the dollar being a weak case here, and then that starts to sell off, and we just tumbled down. Now, why did we do that? Let's take a look. As you can see here, the dollar got a small bid, but nothing major. But initially, the market was rallying on a weaker dollar. But again, there's been some quiet little chattering here that, again, some institutional players are starting to unload their long positions. And again, this can overall signal a possibility of a top in the markets. Again, dollar moved down early. That's why we got the big rally. And then again, the dollar has gone sideways to up, and that's, again, helping keep the markets under wraps here. The UUP is down 12 cents on the day, much, much weaker. All right, the SPY, let's take a look. Again, the SPY here ran all the way up into a key level, guys. Again, note the green trend line. Green trend line is a major level, 117.40 to 50 level. That happens to be, if you scan back here, look at this, happens to be Tuesday's pivot high, I believe. Tuesday's pivot high, that's what that level was. And notice how today's market ran right up into that line, touched it, and then sold off. You have to be able to read these technical trend lines and understand what they mean. We help you do that in the Research Center and make you aware of every little nuance that you need to know going forward into the next day. All right, again, guys, market rallied up early, rolled over, looked like a little in spirit of bull flag pattern, and then it failed. Right here is where it failed, and that point pushed the markets just into free fall. You came all the way down just above the 116 level, and then you've gotten a little bit of a bounce. Volume is getting light again. Notice the heavy selling. Again, we talk about institutions getting involved here. Heavy selling, volume, and then as soon as it goes back to the green candles, they start to lighten up. Then a red candle is a little heavier right here as well. So you can see how that works. It's kind of important to understand that because it does tell you who's buying and who's shorting or selling this market. Now, a couple other things to go over here. The support line, again, the 116 to 116.25 is a key level. We bounced all the way off of that level back to this trend line. Notice this trend line is the pivot low from Wednesday, the low pivot from yesterday. That's where the high bounce takes us into because that level is now resistance. Here was support. We came into it, hit it, bounced, pierced it, went through. The bounce takes us back to that level, which is now resistance. The markets are now kind of stalling out. Again, as volume gets lighter here on a Friday afternoon, you have to wonder if they're going to try to save this market and close it on a positive note, or are they going to leave this market to the downside and let it flush out a little bit more. There's some geopolitical stuff going on today. We're talking about a little North Korean, South Korean issue going on. There's a bunch of stuff going on, obviously, in Europe, although things do seem to be on the mend. The markets did move up today, not only because of the dollar, but because Greece seems to be on the bailout path, where a lot of countries are now agreeing on what to do and how to bail them out, should it come to that. Also, we got GDP numbers tomorrow. Today we got GDP numbers, and those numbers came out at 5.6, down a little bit. They were expected to be right around 5.9, which is where they were reported, revised down to 5.6, and again, that puts a little bit of pressure on the markets, but nothing significant. We got Michigan sentiment, the final numbers on Michigan sentiment coming out right in line as well, and all these numbers were coming out this morning, folks, so they all were released this morning. The market really disregarded them all because the dollar was weak and started to move up, but then again, the switch gets turned, and as soon as the switch gets turned, institutional volume comes in, and the markets do start to come in here, as you can see. So a great tumble down, really second day in a row, you've seen this type of massive selling in the markets. Now let's go to the 60-minute chart. Let's hover on the 60-minute. Couple things to watch. This white trend line right here, you're trying to hold on to it. You've bounced off the lows here. You're trying to get back above it. If this line can close below, and we do trade below on the next candle, you could see a move all the way down to this blue trend line as the next spot of interest. If you get through that, you're going to go all the way down to about 115 to 115.25 on the SPY. That would be your next target. That could be achieved next week, early next week, but the question will be, how do we analyze this market tonight when we pass along this information to our premium members of the Research Center? Do we tell them that the market has topped? Do we tell them it's not a topping pattern yet, or not a topping signal in the markets yet, in which case you want to wait back a little bit and not expect to move right away next week? So we have to watch this very closely, because in all fairness, if you don't get the right signals, they could push this market up Monday or Tuesday back to the highs, and you don't want to get caught off guard in that respect. So keep a close eye, and again, join that Research Center. Everything's included underneath that Research Center, including 40 to 50-minute videos per night on technicals that I do personally. And again, we get into depth on stocks, ETFs, you name it, markets, commodities, currencies. We talk about it all, including hot charts and alerts where posted live swing trades are done throughout the day. And again, that's all included there for that $49.99. In any case, folks, let's go on to a couple other charts here. What are we looking at? Here's the dollar chart. We can see today the dollar is a little bit on the weaker side, although again, it's consolidating. Interesting to note here, consolidating possibly in a bearish pattern. If I draw the trend line for you guys to see here, take a look at this. Down consolidation right there. So a little bit of bearish consolidation, but right now you're floating up. The way you negate bearish consolidation is get above this level here. You get up here, and that will negate that bearish consolidation. So there's a couple different things to look at on the dollar chart here of the UUP. Now going on to some other stocks. Goldman Sachs is getting hammered again today, folks. Let's take a look. Look at this drop on Goldman from yesterday's high. Goldman was trading near $179 yesterday, has collapsed to a low of $171.90 today. So basically a $9, $8 drop on Goldman between yesterday 2 o'clock to today around 1 o'clock. You've gotten that bounce in the markets, although Goldman's starting to come in. Really dramatic fall on Goldman Sachs. JP Morgan, folks, JP Morgan still holding up, but you do have an in spirit of bear flag right here. This is an in spirit of bear flag, folks. And also notice where you're getting support. Double bottom support, gap fill support. That's where the bounce came in. That's a scalping opportunity. For any intraday trader, you got to be on top of that scalping opportunity. Double bottom, gap fill, there's your bounce. You take it on the long side, you run and grab it, and then move out. And now you have the bear flag pattern forming. All right, possible mini M pattern, although again, it's not the greatest of M patterns here that we'll keep in mind on that chart. Again, one of the stocks we highlighted today, I highlighted this yesterday. I said above $65, U.S. Steel is a dead short. Sure enough, it gets above 65 yesterday, right up here. And then look at the fall. A lot of money made yesterday on that play. Today, again, I said if it gets up into this range right here, it's probably a good short as well. Notice how it's the pivot low where you consolidated before you broke up and then you broke down. That's telling you there was support here. Then we broke it. It becomes resistance. Right up here was your shorting opportunity today. Look at the fall on U.S. Steel. Multi-dollar fall off those highs. Over $1 to the downside. More profits to be had there. All right, other profitable plays, again, we'll discuss in a little while. We'll take a look here. Apple Computer is bouncing back, although, again, we talked about 2 down days off the 230-plus break of that a couple days ago. Today it had a good morning session, but it really has rolled over here and is now below 230 again, as 230 continues to look like pretty significant resistance on this chart. Chevron was up much, much more today, leading the markets, but has come in abruptly as well. You can see that rollover and a big bounce there, but nonetheless a nice rollover now coming down, settling right on this little bit of a dual moving average level. That is something to watch as well, along with Exxon. Exxon's been weak of late and is only up about 7 cents today, with the markets neutral-ish to slightly lower. Again, guys, the Dow is hovering here, up about 4 points. NASDAQ is down 8. S&P is down about 1.3 points on the day. So a very kind of mixed bag again. But the fact of the matter is, just like yesterday, markets were up huge yesterday. Today, again, they were up. They weren't up huge, but they were up and have reversed those gains and really given it all back and turned to the negative side on the S&P and the NASDAQ. The Dow continues to show a little bit of relative strength. All right, that's all I have for today. But again, be on board now. Again, we're getting into a period where the volatility seems to be increasing. Day trading seems to be much, much better. Also, swing trading, again, watch for these levels, these key levels on the moves, the possible pivot signals in the market. You need to be in knowledgeable status on these calls to utilize them and make sure you're on the right side of the market here as we get started. All right, folks, we'll talk to you soon. Take care.